Hey traders, Jason here from Levitt Brothers. So I titled this video, Don't Panic When the Market Weakens, because the market just underwent a mild correction. Okay, topped in December, traded down into like mid-January, about a month-long mini correction. And then 2 weeks later, the S&P was back at its high. The NASDAQ is getting close to its high. And so I want to make a point that a lot of big money is made when the market corrects. You get a lot of opportunities. You get opportunities to buy quality stocks at a discount. The best stocks reveal themselves by not falling too much. And so I want this to serve as a reminder to not panic when the market weakens within an uptrend. Okay, obviously we have to be within an uptrend. The market has to be acting well overall. Those, little corrections, 3%, 5%, 6%, 7%, are opportunities that you should be happy for, instead of opportunities to to kind of panic and start thinking like a top's in place. Okay, here is the S&P 500 over the last 2 years. These numbers here are estimates, and I just want to show this to make a point. Back here in February, March of 2023, we had a 9-point-something% correction. Then in August, September, October, we had a little bit more than 11%. These are rough estimates. I just eyeballed it. Don't quote me on these. We had another correction here in April, May of last year, a little bit more than 6%. Nearly a 10% drop here, nearly a 5% drop. 3% drop, and just recently we had about a 5% drop. So the market's in a really good uptrend here. Okay, over the last 2 years, we started at 4,000. Now we're over 6,000. That's a 50% gain for the overall market, which is incredible. Yet look at how many mini or mild corrections there were. Okay, and it reminds me of the quote, and this is not a quote, this is me paraphrasing. I don't know who said it. I want to say it's Peter Lynch, but I couldn't find the quote, so I'm not giving anyone credit, but something about like a key to success in the markets is to keep your head on straight when everyone else is panicking. Okay, so when the market undergoes one of these 3, 4, 5, 6% corrections, and everyone thinks a top's in place and breadth is this, and trading ideas are declining, and the Fed this, and all these reasons why the market should top, the reality is most of the time that correction is a good opportunity. And I have some numbers to back it up, which I want to show you. So I think it would be important to keep this in mind. All right, so here are some numbers. These are from Ryan Dietrich. These are various declines per year, like how many of each decline you get per year. Okay, so on average, there are 7.2 3% dips per year, just on average. Obviously, in a good year, there's going to be less. In a bad year, there's going to be double digits. But on average, there are 7.2 3% dips per year. There are 3.4 5% corrections per year on average. There's just over 1 10% correction per year. So on average, we get 1 10% correction every year. Okay, even in a strong market, we tend to get a dip in there somewhere. There's 0.5 15% corrections every year. So 0.5 means you get one every 2 years, and there are 0.3 20% corrections, and a 20% drop is considered a bear market. So 0.3, that means about one every 3.5 years. Those are the averages. Okay, and again, obviously in a good year, you're going to get less. On a bad year, you're going to get more. But I want to look at the relative numbers here. Okay, if this is 7.2% and this is 3.4%, that means for every 3% correction, only half of them, okay, even less than half of them actually grow to be 5%. Okay, so 3% is like nothing. It's like a rounding error. It's like the market goes down a couple, it's weak for like 5, 6, 7 days. It's no big deal at all. Only half of those actually grow to be 5%. And of the 5% corrections, only 1/3 of them actually grow to 10%. So typically what happens is we have a mild correction of 3%, half the people out there are panicking, yet only half of them grow to be 5%. And if we have a decent 5% correction, which is absolutely normal, even in a super strong market, you're going to have some 5% corrections. Of all the 5% corrections, only 1/3 of them grows to be 10%. Okay, so one of the keys is when we have a 3 or 5% correction, don't panic and think a top's in place and it's going to get bigger and bigger, because most of the time it's not. And if you can keep your head on straight, there's a lot of good buying opportunities to ride the market back up. Now, of all the 10% corrections, only half of them turn into 15%, and of the all the 15% corrections, a little bit more than half turn into 20%. Okay? So what tends to happen is the market tops. It doesn't really top, but it declines a little bit. But of the 3% declines, only like 1 out of 14, 1 out of 15 become a 15% correction. And if you compare these, it's more like 1 out of, what is this, 7.2? So we're talking like 1 out of 20. Okay? So the market declines a little bit. Everyone panics, thinks the top's in place. They pull out their list of reasons why you should be really bearish, and yet only 1 out of 20 times does that actually become a bear market. So going back to the quote, like a key to success in the markets is to keep your head on straight when everyone else is panicking. These numbers point to that. Okay, 3%, 5% corrections, perfectly normal most of the time, especially in a strong market. They're not going to grow to become 10%, but 10% happens. It's no big deal. If I go back to the chart over here, you'll see even in one of the strongest bull markets in history, the market's up 50% over a 2-year period. There are several small corrections and medium corrections, and there's even a couple in here. This is, if you look at, this was close to 10%. That was a little bit above 10%. That was about 10%. Within one of the strongest bull markets ever, you still had a couple of 10% corrections, and yet those were not reasons to panic. Those were reasons to, pull out your, grow your list and buy some quality stocks that held up really well. Okay, so just a reminder, even in a bull market, corrections are normal, and one of your keys to success is realizing that, hey, most of those 3 and 5% corrections do not grow to become 10 or 15, 20%, and if you keep your head on straight, you'll be set. You'll be in the right mindset, at least, to be able to buy some quality stocks that have pulled back, and you'll set yourself up for success, because actually it's a lot. You can make a lot more money after the 5% correction than you can if the market just kind of grinds higher. Okay, because when the market drops 5%, a lot of growth stocks will drop 15, 20%, and that's your opportunity to buy some quality stocks at a discount price, ride them back up and make gains. So when the market's healthy and you get a correction, instead of being pissed, instead of panicking, you should be happy for the opportunity, because that's what sets the stage for outsized gains going forward. All right, hope you got something out of this, and I'll see you next time.